Good morning. Amidst Russia's calling home its U.S. ambassador and Chinese officials meeting their U.S. counterparts, there's a lot of flying in the air this morning. Here's the day's breakdown. U.S. markets closed higher yesterday after the Fed decided to once again maintain its 0.25% interest rates. In his press conference, bank head Jerome Powell refused to comment on bond yields continuing up, saying he'd only change his buying habits if appropriate. Mortgage applications this past week decreased by 2.2%, 1% more than last week, while the 30-year rate increased by 2 ticks to 3.48%. Building permits and housing starts were also down further than expected, while in Canada, consumer inflation fell further than anticipated to 1.2% year-on-year in February from 1.6% the month before. On the dollar-yen pair, we're looking at an extremely strong bullish engulf this past hour, ending in an overnight bottom with a decidedly positive RSI. We've been struggling with that 109.25 resistance line now for the past 10 days, and the Fed has definitely given up some direction. Break above, and we can finally target this week's R1 at 109.6. Later today, jobless claims and the 10-year inflation bill protected bill auction. Europe yesterday, closed mainly in the red, except Germany's DAX, which held on to a 0.25% gain thanks to Volkswagen. EU CPIs came in level with January, with Germany's 30-year bond doubling its yield to 0.3%. This morning, the EU will publish its trade surplus with expectations of a €4 billion decrease. And at noon GMT, the Bank of England votes on interest rates. Asia is up this morning on the US Fed's monetary policy decision from last night. Chinese diplomats will be asking their US counterparts to ease restrictions on Chinese entities and individuals as they meet in Alaska today. A proposal for a virtual meeting between Biden and Xi may also be in the works. Overnight, New Zealand published its Q4 GDP, which is down from last quarter's 14% increase to a 1% contraction. While in Australia, unemployment improved markedly to 5.8%. That's a 0.5% improvement on January. Tonight, retail sales down under and consumer inflation from Japan. And then at 2:30 tomorrow morning, the Bank of Japan will deliberate over its monetary policy. Ireland last night said it would compel crypto firms to comply with anti-money laundering rules. Come April, traders will no longer retain anonymity, and the entire sector will have to align itself with the rest of the financial services industry's rules and regulation. Meanwhile, Morgan Stanley is allowing 3 of its wealth funds to invest in cryptos. Oil is down this morning for the 5th day in a row on the EIA's 2.4 million barrel stock increase. While not as bad as 3 million expected, we're still being plagued by lockdown demand. Still, the agency expects demand to increase by 5.4 million barrels per day in 2021, especially in H2. All this happens as 21 states set up to sue the U.S. president for rescinding the Keystone XL oil pipeline due to environmental concerns. Gold, meanwhile, soared on yesterday's Fed decision. We've been heading up here for the past 10 days, more or less following those same Fibonacci levels on the way up as we had on the way down from a 1-hour 1820 peak last February. Both the RSI and the bearish engulf at the end may be a problem, though we are seeing the beginnings of some bullish momentum at the moment. I guess it's up to the Bank of Japan tonight and some US data this afternoon if we can buy the current dip. Volkswagen surged 11% before the bell yesterday to become Germany's most valuable company. That's after yesterday's earnings report. Today we're waiting to hear from Nike and FedEx after the New York closing bell. Both firms last quarter surprised to the upside in earnings per share by about 24%, so look out. That's it. Lots of stuff up in the air today, but excitingly so. Come back tomorrow and we'll see where it all went.